Hi, I'm Kevin Ramirez, a licensed mortgage professional of over 20 years and founder of mortgagelicensetraining.com. And this is ChatGPT versus Loan Officer. What is a mortgage? ChatGPT says a mortgage is a big loan for buying a house. The house is collateral, which means if you don't pay the loan, the bank can take the house. So to help you understand what collateral is, think of it as your fun times going out to the bars and you had a friend inside of the bar and you're talking to the bouncer and he wants to hold on to your ID for you to go check for your friend before you pay for the cover charge. Well, your ID in that case is the collateral for the bouncer making sure you're going to come on back and pay the cover charge if necessary. Same concept when you buy a house is when you're borrowing this money from a lender, the lender, they're going to use the property itself as the collateral for the loan. Well, that means that they actually go to public records and put a financial lien, which is known as a financial claim on the property. If you, for whatever reason, stop making your mortgage payments, that gives the lender a right to seize the property, their collateral, and then take that property and sell on a public auction to someone else to recover their money. That's also what's known as the foreclosure process. How do I know how much I can afford? ChatGPT says, to know how much you can afford, look at your monthly income and expenses. See what's left after all bills, and that's your budget for a house payment. It's good to save some extra money too. One, you could go ahead and look online, see what current rates are doing, interest rates that is. Then what you could do is look for an online mortgage payment calculator, like they call it an amortization calculator. Plug in the loan amount, plug in the 30-year, plug in that 30-year fixed rate that you were looking at, and it will tell you what the monthly mortgage payment will look like. Actually, we'll call it what they call the principal and interest. That's actually the two main components of the mortgage payment that you have to pay to your lender every single month. But one thing to keep in mind is there is a little extra on top of that. And with every property, there is property taxes as well. And the last thing to consider is homeowners insurance. Well, thankfully, it's a great thing to have homeowners insurance when you buy your home. You want to protect it if things like fires happen, or reach out to some homeowners insurance providers, get a quote, and add that as well to your full monthly mortgage payment. And then you have a good idea of what payment you're comfortable with. What's the first step to getting a mortgage? ChatGPT says the first step to getting a mortgage is talking to a lender or bank. They'll look at your money and credit to see if you can be approved for a loan and how much. But I want to elaborate a little bit further on that and be aware there's something called a pre-qualification and a pre-approval. Now, both are good, and both can help you secure a home. However, a pre-qualification usually just involves you communicating with your loan officer, them asking you some questions, and then them saying, well, everything looks good, and they could even issue a pre-qualification letter. Sounds pretty good, but much better than that is what they call an underwritten pre-approval. Is not only do you have that conversation with your loan officer, but on top of that, you'll submit in your income, your asset documentation. It'll be reviewed by the loan officer as well as an underwriter. They're the person on the loan that basically says, yes, you're approved, or no, try again. When you get pre-approved by an underwriter, they will issue a underwritten pre-approval letter, and that carries much more weight when you're trying to put in for a purchase bid out more than a pre-qualification letter. What should I look for in a house? ChatGPT says, well, first is price. Can you afford it? Then size. How many rooms do you need? Location. Is it near work, school, or places you like? Safety. Is it in a safe area? And future. Can you see yourself living there for years? If you ask any homeowner, including myself, it really comes down to the good old saying, what's most important with real estate? Location, location, location. It's all about finding that area that you just know feels right. You want to find a home that not only do you feel proud to live in the area, but it's safe. It's around good schools. It's maybe close to your family or close to your work. So you definitely don't want to overlook or minimize the importance of the location of the property where you could see yourself in for the long haul. Which brings me to my next point. So besides location, equally important is, of course, how comfortable will this property make you for your long-term goals? So I'll give you a little personal story. I was put into a situation where it was in a great location, but my family outgrew the home and the housing market took a turn, not for the better. I ended up being in that property a little bit longer than I wanted to, and it did not suit the needs anymore of what my family needed as we grew. You want to look at a home that, I hate to say getting stuck in, but a home that if whatever happens in the future, you could see yourself in there for the long run. Now, as far as some great alternatives to which type of properties out there, Well, pretty much everyone wants a single family residence. It's a beautiful property, but there are great, cost effective, yet still very valuable property types that you should consider. Townhomes are a fantastic alternative. They look just like single family residences many times. They don't have joining walls, and you actually own the land and have a yard. So, great alternative there and for lower the cost. How do I qualify for a loan? ChatGPT says credit score. It shows if you pay your bills on time, income, how much money you make, job history, how stable is your job, debt, how much you owe others, and down payment, money you can pay upfront for the house. I like the items that ChatGPT just mentioned, but it really comes down to just three simple things for you. Is first, do you have consistent income? Second, how is your credit profile? And third, do you have money set aside for the purchase transaction? So look at each one of these. When we say consistent income, it really means stable income. You got to have 2 years on the same job, preferably in the same position at the same job. Documentable income, by the way. If you're getting paid under the table, that doesn't really work. Even on your tax returns, you might make a lot of money, but if you have a whole lot of write-offs, well, guess what? We usually have to qualify you of what you qualified with the IRS. Next up is your credit profile. The better your credit score, actually the higher chance of getting approved and better pricing for the loan. Anything above 700 and 750, you're looking even stronger in the lender's eyes. And of course, the third is money set aside for the down payment of the purchase. Now, how much? Typically about 3% of the purchase price is what you need for the down payment. Some programs might require a little bit more, like 5%, and sometimes some programs even a little bit less than 3%. You actually need a second little stash of money set aside for closing costs. Now, closing costs, of course, of all the fees of doing money with a lender, as well as doing all these other third parties involved with the transaction. What if I don't qualify? ChatGPT says, improve your credit, pay bills on time, and lower debts. Save more money, a bigger down payment can help. Look for a cosigner, someone to back up your loan. Check government programs, some help for first-time home buyers. Wait and try later. Your situation might improve with time. I don't like that at all. Well, I'll let you in on a little secret. Pretty much nobody has all the perfect common criteria to qualify a mortgage. And that's known. That's why a lot of lenders are built with many different programs with actually many different guidelines. And there's many tailored to first-time home buyers as well. One, keep in mind, if your credit score is at least 500, you got a good chance of still getting approved. But what we look at as lenders is called compensating factors. So for instance, the credit may not be ideal, but maybe your income situation, your employment situation it can compensate for the lower, weaker criteria, if you will. How do I find a lender? ChatGPT says, read reviews, avoid those with many bad ones. Ask for references, talk to past customers. Beware of big promises. If it sounds too good to be true, it might be. Avoid high fees. Some might try to charge more than they should. I think what it really comes down to is, yes, you do want to look at some online reviews because reviews can give you a great picture of that. And even if you find negative reviews, what I've found a lot of times, especially in the mortgage industry, it's not about if something bad happened, because this is mortgage, it's complex, things can happen. It's about what did the lender do to remedy the situation? Did they try to make it right by the customer? Another thing to look at is, of course, which programs do they offer? So you want to find lenders that have a lot of different niche and diverse products that offer much different criteria for first-time home buyers, as well as folks, maybe some challenge situations. You may actually find a lot more product diversity and possibly better pricing by looking into some independent mortgage bankers. A lot of independent lenders have a much wider array of products and again, can have more competitive pricing because they specialize in just mortgages rather than many different services. What are some loan officer red flags? ChatGPT says, pressuring you to decide quickly or changing loan terms suddenly. Avoiding your questions and not being clear about fees, and having many negative reviews or lacking proper credentials. I like to take it a step further and characterize them in 3 different shades of a loan officer to maybe watch out for. The first one I'll call the pushy yellow, like ChatGPT mentions, things that kind of treat you like a number or a dollar sign. Sometimes you're talking to them and maybe it looks like you may not qualify as they're interviewing you for the process. Gauge how they react to you. Sometimes you could tell exactly the loan officer's demeanor might change for the negative if it seems like you don't qualify. So watch out for that push yellow who really seems more interested in themselves than helping you. The next character I say to watch out for is the unprofessional, maybe even immature loan officer. They're eating, finishing up their lunch. Maybe they're typing emails while they're speaking to you. You could totally tell they're giving, Those are the kind of things to watch out for that unprofessional loan officer. And the last one I'd say, this one's unfortunate, but I call them the fish out of water loan officer. They're just maybe in the wrong profession. Maybe they don't quite have the personal skills. So you can pick up on, they don't have the industry knowledge. They haven't taken the time to invest in their profession and know their product. Any one of these three, I say, is a red flag, and maybe not say change lenders, but maybe try to get a supervisor on the phone and just change loan officers. So don't always judge a lender just by one loan officer you've spoken with. To learn about your loan officer directly, you can look them up on a public website called the NMLS. That's the Nationwide Multi-State License System. It actually is a consumer access point where you can put in your loan officer's information and look them up, see if their licenses are valid, see how long they've been a loan officer, and more importantly, even see if there's any kind of official complaints about them from other customers across the nation. Well, ChatGPT is definitely impressive, but no, I do not think it'll replace loan officers, because I think loan officers provide an intangible quality to be able to assess your situation and really be a true consultant that guides you along the way while you're looking for your home loan. But thanks for watching. Follow me at Mortgage License Training. I share mortgage hacks for first-time homebuyers.